Have you gone through a bankruptcy or a consumer proposal? This does not mean that you will never be able to own a home again. In fact, I've worked with many clients post-bankruptcy and post-consumer proposal who thought that they were going to be shut out of the market for years to instead buy a home and get back into normal financial territory again. In this video, I'm going to share 10 smart tips on how to get you mortgage ready after bankruptcy. Let's dive in. Tip 1, start prepping as soon as you get discharged. Don't listen to people who tell you that you need to just sit and wait for 2 years or 7 years or whatever following your discharge. The discharge is not the only piece of the puzzle that you need to be thinking about. While the clock is ticking, you can be working on the other pieces of the puzzle. The bottom line is that there are lenders who will consider you immediately following your bankruptcy discharge. And there are others who won't touch you until the bankruptcy is completely gone from your credit bureau. And there are others who are somewhere in between. But the key point is it's only one piece of the full financial picture. Tip number 2, get your credit report and review it carefully. It's very common for errors to show up on your credit report following a bankruptcy. So what you want to be looking for with both TransUnion and Equifax is to see that everything that was included in the bankruptcy is actually showing as written off and a zero balance. If anything looks off, contact your bankruptcy trustee. They should be able to help you with getting the error corrected because the credit bureaus are notorious for taking forever to fix problems on the credit report. I've seen debts continue showing as delinquent when they should have been gone from the credit report years ago. And this can really hurt you in not being able to get the mortgage terms and conditions that you want. Tip number 3, start rebuilding your credit with 2 pieces of credit. Typically, you're going to be using credit cards for this. And ideally, you want an unsecured card. So try for that. But if you can't get that, go with the secured card. Your bank might be able to help, but if that doesn't work, then jump on over to my website. I have some articles there on rebuilding your credit following a bankruptcy or a consumer proposal. And I mention a couple of lenders there that will do secured credit cards. There are a few things that don't work with rebuilding your credit or aren't the most efficient way of rebuilding your credit. The first one is getting a prepaid credit card. This honestly is no better than a gift card as far as your credit is concerned, so don't even try that. The second thing is if you and a partner or a spouse were on the bankruptcy, in that scenario, you each should be getting 2 new pieces of post-bankruptcy credit, not a joint card. If you both have the same credit card, only one of you is going to benefit from that as far as your credit report goes. And the third thing that I would suggest is don't go with a credit rebuilding loan, or there are other terms for it, but there's no reason for you to get a loan just to rebuild your credit because it means you'll be paying interest for something you don't actually need. If it's an RSP loan, as long as it's reporting to the credit bureau, that can be something that could help. But otherwise, just use the credit cards as I mentioned, and those are perfectly good for rebuilding your credit. Tip number 4, keep your balances on your credit card at any time during the month to less than 30% of your limit. So what this means is if your credit limit is $1,000, at no time during the month should your balance be more than $300. And this is because lenders look at something called credit utilization, and the credit bureau algorithm factors that in. And if you have more than a 30% balance, it makes it look like you're starting to get over leveraged and it hurts your credit score. Use each card a few times a month for things like gas or groceries and pay them off in full at the end of the month. This helps you rebuild trust with lenders and build up your credit. Tip number 5, never miss a payment ever again. This one is simple but powerful. Especially following a bankruptcy, your credit report is going to be scrutinized. It doesn't feel fair, but that's just the way it is. And so you need to make sure that you don't miss any payments on your phone bill, utilities, and of course, any credit cards and things like that are reporting to the credit bureau. Tip number 6, show stable income. So that can mean staying in the same line of work, potentially with the same employer, but not necessarily, as long as you can show a track record of the same type of work and the same type of stable income. If you're self-employed, it's a little trickier. You definitely want to be filing your income tax return, and possibly your tax returns are what we would need to use to show your stable business income. But alternatively, making sure that you're documenting your income through deposits to your business bank accounts over a period of 12 months or longer. So that's something that you definitely want to be watching, and in particular, if you've had a bankruptcy or a consumer proposal in the past. Tip number 7, save the biggest down payment that you possibly can. That's obviously a bit of an oversimplification, but following a bankruptcy, there's a bit of a formula to how much minimum down payment you're going to need. And it's connected with how aged your reestablished credit is. So if you've just discharged your bankruptcy and very recently started reestablishing your credit, then in that scenario, you need to have at least 20 or 25% down payment. If you have 2 to 3 years worth of reestablished credit following your bankruptcy discharge, then there's a little bit more leniency. Some lenders will allow you to have a down payment of as little as 10% down. One thing to keep in mind though is at least 5% of that money has to be from your own savings. It's a little bit more of a stringent rule for you following a bankruptcy. If you want to do the bare minimum down payment, like 5% down, with that, you're looking at needing to show at least 3 years plus of strong reestablished credit. And also the rest of your financial picture has to be very strong as well. Tip number 8, consider using a cosigner. If you have somebody who has strong credit and strong income and very limited other debt, they may be the missing piece that can help you get into a mortgage sooner. Just keep in mind that if somebody is acting as a cosigner, then they're on the hook for the mortgage just as much as you are. So it is a big ask. Tip number 9, be open to B lenders or alternative lenders. Now, I'm not talking about private lenders here. In a post-bankruptcy situation, my opinion, private lenders are only worth it in very limited circumstances. You're much better off with an alternative lender, reputable and established Canadian financial institutions. And as long as you're using that to build up more reliability, then eventually you can move to a mainstream or AAA lender. But in the meantime, you may have been able to get into a home much sooner. Rates with B lenders are a bit higher than with A lenders, but again, it's something of a stepping stone to allow you to get into that mortgage sooner and use it as a transition to getting back to mainstream territory eventually. Tip number 10, work with a mortgage broker who understands bankruptcy. Just like not all lenders are the same, all mortgage brokers are also not the same. And what you want is somebody who understands your situation and as well understands which lenders are going to be the most appropriate ones for that situation. What you don't want is to go with somebody who's just going to jump you into the most expensive lender with higher rates and fees and a high broker fee just because that's easier for them. I've worked with many people following a bankruptcy and helping them to get a mortgage. The key is to come up with a game plan that works for you and that you're comfortable with. If you're not sure where to start or you've already been turned down by your bank, don't give up. Let's have a chat and talk about the possibilities for your own situation. If bankruptcy is in your past, home ownership can still be in your future. Let's connect, talk about figuring out a roadmap that feels right to you, and we can go from there. Feel free to reach out to me anytime.